Hello, Phoenix friends. Let's get nerdy with some real estate numbers. I've got this week's inventory watch as well as some trending. I've broken out some of the data and zoomed in on some of the cities so that we can understand where certain locations are, West Valley, East Valley, and things like that. And I'd love to just jump right into it and get started. So, let's start by looking over this week's inventory watch, and we will check out the numbers here. So, if you've been with me since for the past few weeks, on August 6th, I started doing weekly inventory checks to see, where's Phoenix Metro going as far as total inventory. Are we going to get some relief for buyers, and what does all that look like? So, let's get started on the numbers I pulled yesterday, September 16th. Inventory went up again. So we're on a 7 week trend with inventory going up here. So we're at 15,000 homes for sale, active and active contingent contract houses. So that means in the last 6 week inventory has grown, or 7 weeks, I'm sorry, inventory has grown almost 41%. And so we're starting to see inventory climb. And that's great for home buyers here in the Phoenix Metro. What's not great is the high interest rates that we're still seeing. But at least we're getting some inventory back. So we'll take the small wins as we get them. The other notable thing here is that we did see closings trend up for the week. So we started seeing closings kind of trend down. And this is always a larger number here because it included the end of the month for August. So end of month closings are always the highest week of the month. But then we saw listings kind of trend down under 1,000, and that was the first time we saw that. But they kind of climbed back up to this 1,200 mark. So we're going to keep an eye on closings to see, is demand ticking up? I don't know. But we'll need a couple more weeks to kind of see. I did see that interest rates tick down a little bit. I think we're still at around 7%, but I think we were higher, closer to 7.5%. And I think we're down to 7.1. And so I don't know if that made a difference on things, but sold listings are usually things that went under contract 30 plus days ago. So I don't think that the interest rates have played any part in sold listings. Under contract listings, that would be where they're playing part there. So we're still, if we look at total sold listings, an accumulative, the first 3 weeks of August versus the first 3 weeks of September, we're actually pretty flat in sold listings, which means we've sold the same amount of listings for the first 3 weeks of each part of the month. So I think the difference will be what does the end of the month look like for September, and will it be as high as this one here, 1,700? So let's keep an eye on that. Now let's kind of trend down to under contract listings. This is the one that I have been really following, the pending listings. These are telling our future, because pending listings are buyers in the market right now that will go under contract, and then they will close 30 days, 45 days out. And so it's kind of telling our future of how many listings are actually going to close and what is the price. So as you can see, pending listings every week really has been trending down. Last week was the lowest, and then we're up to 600. But we started August with 973 pendings. And so we're down 33% for looking at the first week of the month versus where we're at the first week of August when we started inventory watch versus where we're at now. So we're quite down significantly. If we do a cumulative total, we're down 27%, which is still very, very significant. So something to watch there. our pendings. And then, so one thing to note, as pendings go down and inventory rises, that brings that dynamic of price reductions. So as long as inventory continues to trend up and under contract listings continue to trend down, that is going to help bring some affordability back to the market and start with some price reductions. So just remember that. The other thing that I like to look at on Inventory Watch is our residential rental market. The rental market is going to be key to kind of watch here, because people who can't afford to purchase because it's so expensive will go to rent. And if it's too expensive to rent, they will move in with buddies or family, or start conforming in households and kind of reducing that. So that is also something to watch. We've also seen the number of rental inventory increase along with the homes for sale inventory. So there is a lot more to choose from this week of this month than there was 7 weeks ago. Inventory is up 37% for rentals as well. So that's something to watch. Last week, we talked about Invitation Homes, and I told you we were going to start trending out the inventory that they have. They're up 2.7% just from last week. They have 10 more rentals on their website than they did last week. And then I also brought in a new property management company that manages for investors and like Wall Street type owners, and that's Progress Residential. Now, last week we did a chat about Invitation Homes because they are a publicly held company, and so all of their data, they do public filing. So I was able to grab their data and give you the download on Invitation Homes. Progress Residential is not a publicly held company. They are privately held, but they do have a website where I could look at their inventory. So they're at 466 this week. I didn't check it last week, so we'll continue moving forward, checking Invitation Homes and Progress Residential. Both of these companies hold in excess of 80,000 homes across the United States in their portfolio as single family rental homes. There is some information here that I did grab about what they hold here in the Phoenix market, and they're very similar to Invitation Homes. They have over 7,000 homes currently on not on the market, but 7,000 homes here in the Phoenix metro that they own for rentals. And you can just see these are some of the stats. They paid over $32 million in taxes. They've invested $2.4 billion in Arizona in their homes, including acquisitions and fixing properties and things like that. They have 75 homes being built, and I don't know when this was last updated, but I don't know if this number is still true. And their average monthly rent is, they say it's $1,875. Now, our current average monthly rent in the MLS is $2,300, but I think that is inflated because of the Airbnb type furnished rentals that are in the numbers that I'm tracking. So their numbers, they don't have any like short-term like Airbnb. They do long-term single family rentals. So this is interesting. Invitation Homes was closer to like 1950, 1975. So theirs are a little bit more expensive. So that's who else we're going to start tracking an Inventory Watch here. And so inventory is up. So it's up for Invitation Homes week over week. So just in 1 week, they're up 2.7%. We're up, we actually only went up 0.35 in the total in the MLS. But overall, since we started Inventory Watch, rental inventory is up 37.9%. So now let's take a look at inventory closed and where we're at there. So if we look at sales price average, so this red one right here, actually, before we talk about pricing, let's look at the total sold. So the total sold is also decreasing. So when we started this project in August, there was like 1,000 homes that had closed that week. And every week since then, it's been reducing. And so last week we closed 521 rentals, compared to, the 1,000 from the beginning of the month. And then let's look at pricing. So we know that demand is coming down. Same with under contract listings. Before we talk about pricing, under contract listings, again, that tells our future, right? And so how many are we putting under contract will tell us how many we're actually going to close in the next 30 to 45 days. And so you can see this number is also decreasing, and we were at a really low 222 homes versus the 482 when we started. So pendings, the number of under contract, are also being reduced. So now let's talk about where rents are going and what we're seeing. So again, these numbers here include short-term, like Airbnb type rentals, people come into town and they want to, go to spring training and they get a furnished rental, which is why these numbers are kind of inflated a little bit higher. So I think we're probably closer to that $2,000 average rent, on an unfurnished single family rental versus a short-term, like, furnished rental. So we can see here we started at 2,642 on August 6th, and we kind of been bouncing around between 22 to 2,400, and we ended 9/16 this week at 2,370. Which tells me that since August 6th, we've seen a 10% increase in rents, since August 6th. So we're going to continue to keep an eye on that. It's been kind of stagnant for the past couple of weeks between, 2,350 and 2,400. So I don't know. We'll just have to continue watching it to see like how much lower, if it's going to continue to go down as fast as it did in the last 7 weeks, or are we going to continue, or is it going to kind of slow down now? With rents, the reason why I really want to watch it is because if rents get cheaper, much more cheaper than it is to purchase, like I feel like it's already cheaper to rent here in Phoenix than it is to purchase, which is why demand is so low right now, because people are just like, oh, I'm just going to go rent. But if it gets much more cheaper, it's really going to stagnate our housing market even further and cause home prices to come down, because we're going to be competing with the rental market and for people to purchase. So I think that's where we're at there. Those are the numbers that we check on weekly. But now let's look at like some local things of how is the local market doing, right? How's Tempe doing? How's Phoenix doing? And how are each of the markets kind of doing? Let's look at, this is the quick one, September 17th. So I put some stats together, some kind of like listicles of top 10 areas to kind of keep your eye on, right? So let's take a look at what we got. This is comparing this year compared to last year, on a cumulative. So we're looking at here, we have the year over year increase in home values. I wanted to put 5 locations that had an increase in home values around the Phoenix metro, and really there were only 3. There were some more areas that had increase in home values, but they were like in vacation markets like Prescott and Sedona and Flagstaff and things like that. So if we're talking local, Paradise Valley actually saw an increase in home value of 5.8%, and Anthem and Scottsdale actually held value, which is really important to notice that Paradise Valley is the only one in the metro that actually seen a significant increase in home values. Everybody else either held value or saw a decrease. So these are the top 3 where they're kind of holding value or we saw an increase in value. So year over year decrease in home value. So these are the markets where we are seeing home values decrease, where we're probably starting to see inventory start to rise and that demand level start to fall below a certain level. So we're seeing Litchfield Park is down 12%. Santan Valley is down 10%. Maricopa is right behind at 9.9%. Buckeye at 9%, and Apache Junction is down 8.9% in home values. So these are the markets where it could take a little bit longer to sell, and you might not want to chase the market down as you're starting to think about selling your home. If you're a buyer in these markets, you may have a little bit more leeway in your negotiations with the sellers. So year-over-year increase in closed sales. So again, I actually did pull the vacation markets for this one because there wasn't really much of an increase around Maricopa County, like around the Phoenix metro, between Maricopa and Pinal. So I had to go into the vacation markets to see like where is there the biggest buyer demand. So Flagstaff, and this actually goes opposite direction. So Flagstaff is at the bottom at 12.3% increase in closed sales, where and then we have Overguard, Waddell, Sedona. Prescott had a 19% increase in closed sales, Chino Valley at 20%, and Prescott Valley at 25%. So these are the markets with the biggest buyer demand, where there were more sales that closed this year from January to September compared to last year during the same time frame. So go Northern Arizona. Let's look at year-over-year decrease in closed sales. So these are the markets where we're seeing demand really fall. And Al Mirage rounded out the top of the list at their total decrease in closed sales is 42.3%, which is a huge amount of demand lost. Now, I added the home values and like where their home values are compared to demand, because I think it's very important that we understand this relationship. Home values are only down 10%, even though demand is down 42%, which means that inventory is also down. And even though demand is down 42%, I think inventory was much further down, kind of balancing the market a little bit. They're still down 10% in home values, which is still very significant. But if you compare that to Tempe, which is down 31% in closed sales, but home values are only down 5%, which means that inventory, like the balance of the inventory is much more regulated in Tempe, Phoenix, and Cave Creek than it is in El Mirage. So you can see the next four, Tempe, Phoenix, Cave Creek, Chandler, they all have home values are only down like less than 5%. So it's less significant than El Mirage, even though the amount of home sales that have closed is very significant, like less, right, on the decline. Phoenix is 25%, Cave Creek's 25%, and Chandler is at 23.8%. But in Chandler, home values have only dropped like 3.4%, which is, you know, I mean, it's still negative equity, but like comparatively to the other ones that we mentioned, not too bad and faring pretty good. So that just means that even though inventory is low, buyer demand is a little bit higher. Let me see which way we went. Okay, so new listing growth. So these are the markets where there's actually more people putting their home on the market. But again, you can see that we're only seeing new listing growth in these kind of vacation Northern Arizona markets: Show Low, Overguard, Sedona, Prescott, Mons Park. This kind of tells me that because these are also the markets that had the biggest increase in home value and sales growth. So this kind of tells me that these markets, even though like inventory is low, like it's still kind of, they're kind of healthy, where we have a good amount of inventory, we have a good amount of buyer demand, homes are still closing, and they're not really being affected by the market that we see down here in the Phoenix metro. So it's really interesting to see that. So next we're going to talk about new listings on the decline, right? So again, this is kind of the same thing I was just talking about, where we're like, we have home sales on the decline, but we also have new listings on the decline. So we have inventory and supply and demand. And so when these things are more balanced out, you see a less of the effect on the average sales price, right? Where we saw only sales prices go down like 2% versus a 10%. So these are the same, these are basically the same locations that we just saw where sales are down. So listings are down and sales are down, but the bottom four prices are kind of holding at like less than 5% decrease in average sales price. So 50% new listings compared to last year in El Mirage, 36 to 40% in Chandler, Gilbert, and Phoenix. So listings are on the decline, but buyer demand is also pretty low. And it's kind of creating this stalemate is what we're seeing. So if you're wondering if your home will sell in this market, I've actually put together a sold score. That's kind of what I call it. I put some data together. We figure out like how likely will your home sell in this market. It's absolutely free. You just have to go to mysoldscore.com, just pop in your address, and it'll pop out a score. And any score like over 50, your home is more likely to sell. It's a little bit harder in this market to figure out like, oh, what's the buyer demand doing? What's inventory doing? Because it's just so weird. So I put this together to help homeowners figure out like, hey, how likely will my home sell in this market? So again, if you're scoring anything like over 50, your home is more likely to sell. And your next steps is probably be like, okay, great, what can I sell it for? And so you're going to want to reach out and grab a home valuation and get like a CMA done. If you're in a location where your sold score is under 50, that just means that we have to do some optimizations like to your listing, right? And like figure out like, okay, now we got to look at curb appeal, we got to look at fresh paint, we got to look at like a whole bunch of other things to help like get your score up and able to make it more saleable in today's market. So that's all I got for you. If you're thinking about selling, you're wondering if your home can sell in any of these markets, go check out mysoldscore.com. It's again absolutely free. Thanks for checking out data with me. I'll have more data for you guys next week.